Hello everyone, and thank you for joining me today. Over nearly 2 decades of studying markets and analyzing the moves of global CEOs, visionary entrepreneurs, and the world's most successful capital allocators, I've had a rare privilege. These conversations provided me with a direct window into the specific psychological blueprints and behavioral patterns that lead to massive wealth creation. Today, I want to distill those years of observation into the fundamental habits that truly move the needle. For those who are visiting this channel for the first time, welcome. My goal here is simple: to deconstruct every major corporate saga and the strategies of market legends. Having spent nearly 2 decades analyzing these trends, I've identified a set of non-negotiable rules for managing and multiplying your capital. Habit 1. The power of mechanical investing. If you want to reach financial escape velocity, you must remove your own emotions from the equation through automation. The most successful investors I've encountered don't rely on their monthly willpower to decide how much to save. They build a system that makes failure impossible. Consistency is the primary engine of wealth, and automation is the fuel. I've adopted a pay-yourself-first architecture that I learned from the elite. Every month, a predetermined percentage of my income is diverted into an investment portfolio before I even see the balance in my checking account. My lifestyle and expenses are forced to adapt to whatever remains. By eliminating the decision-making phase, you eliminate the risk of procrastination. You also completely remove the temptation to spend on impulse. In the world of finance, if you have to manually move money every month, you are eventually going to fail. Leave no room for human error. Habit 2. Focus on the net retention, not the gross income. Most people are obsessed with their top-line salary, but true wealth builders focus on their retention ratio. It doesn't matter if you earn $500,000 a year if your lifestyle costs $490,000. To build real momentum, you have to prioritize how much stays in your pocket. Are you leaking capital on status symbols that serve no functional purpose? Are you upgrading your lifestyle just because a neighbor or colleague did? The individuals I've studied who created lasting generational wealth focused almost exclusively on internal growth. They focused on things like mastering new skills, networking with higher value circles, and acquiring cash-flowing assets. They are far more interested in their net worth than in looking like they belong in a high-end magazine. Habit 3. The philosophy of quiet wealth and value-based spending. I've noticed a recurring theme among the ultra-wealthy. They rarely participate in the flashy trends of the moment. They aren't chasing the latest luxury handbags or exotic cars to prove a point. In fact, many of the most legendary stock market investors I know are the most unassuming people you'll ever meet. Their lifestyles haven't ballooned just because their bank accounts did. I remember a conversation with a veteran Wall Street investor. Despite a net worth reaching hundreds of millions of dollars, he maintains an incredibly grounded lifestyle. He has the same house, the same circle of long-term friends, and a car that serves its purpose without being a trophy. These people enjoy high-quality experiences, but they prioritize value over price. Whether they are buying a blue-chip stock or a piece of furniture, they ask if the utility matches the cost. This disciplined approach to consumption allows them to funnel significantly more capital into assets that actually grow. Habit 4. Transitioning to an abundance mindset. The most successful figures I've met have a distinct way of viewing risk. They tend to focus on the massive potential upside, but they always create a safety net for the downside. They don't just sit safely on the beach. Instead, they learn how to read the waves and ride them. They treat themselves as their own most important investment. This means constantly upskilling and pivoting when the market shifts, moving away from a scarcity mindset where you are constantly afraid of losing what you have, toward an abundance mindset is a profound psychological shift. It requires significant inner work to allow yourself to fail. You have to give yourself permission to experiment with new career paths and invest in emerging opportunities. But once you realize that the world is full of asymmetric bets, where the reward far outweighs the risk, your financial potential becomes limitless. Habit 5. The horizon advantage in long-term thinking. I look back at my own journey and remember my first systematic investment plan. It was a modest $500 a month into a diversified index fund. I stayed disciplined for a decade. Today, that single monthly commitment has compounded into a massive portfolio. In the early stages, you aren't really seeing growth, you are just experiencing market volatility. The magic of compounding only truly reveals itself after the 5-year mark. Most people give up in years 2 or 3 because they don't see immediate results, Or even worse, they panic when the portfolio dips. I've interviewed market titans who watched their holdings drop by 50% during a crash and didn't blink, while the average person sold at the bottom. Wealthy people plan in decades, not quarters. If you give compound interest the time it needs, it will eventually do the heavy lifting for you. Habit 6. Capitalizing on the golden decade. If you want your 40s and 50s to be a period of freedom rather than stress, your 20s and 30s are your most critical window. This is the golden decade where you typically have the fewest responsibilities and the highest level of physical energy. This is the time to be aggressive. By the way, let me know down in the comments, what year of your golden decade are you currently in? I'd love to see where our community is at. During this 10-year phase, you should be doubling down on skill acquisition, building side businesses, and aggressively stacking assets. It's a challenge, especially with the rising cost of living and global inflation. But if you miss this window of time-based compounding, you spend the rest of your life in catch-up mode. You end up trying to fund a retirement while your bills and family responsibilities are at their peak. That is a much harder mountain to climb. Habit 7. Utilizing System 2. Thinking a common trait among the wealthy is their ability to resist knee-jerk reactions. This is a concept popularized by Daniel Kahneman in his book, Thinking, Fast and Slow. System 1 is your primal emotional response. It's the voice that tells you to sell everything the moment you hear bad news on the TV. System 2 is the analytical, deliberate, and rational process. The elite have trained themselves to engage System 2 during times of crisis. Instead of reacting with fear, they step back and analyze the data. They look for logical gaps and seek additional information before making a move. By slowing down their decision-making process, they avoid the expensive mistakes that emotional investors make every single day. Habit 8. Developing a stewardship relationship with money. Finally, I found that the truly successful don't actually chase money. They pursue a purpose or a vision with intense passion. The money simply follows as a byproduct of the value they create. There's a sense of detachment that comes with wealth. As one legendary billionaire once told me, it's a wonderful thing to earn a fortune, but you must view yourself as a trustee of that capital rather than just an owner. This perspective of stewardship changes how you treat money. It becomes a tool for a higher purpose rather than just a way to satisfy personal ego. When you understand that money is a means to achieve freedom and autonomy, the ability to live on your own terms and make difficult choices, you stop being a slave to it and start making it work for you. These are just a few of the core principles I've picked up over nearly 2 decades in the field. I plan to continue sharing these insights as part of this series. If there's a specific financial topic or a certain type of investor you want me to explore, please let me know in the comments. Thank you for your time, and I wish you a productive and prosperous day ahead.